Hello, chart watchers, and welcome to this Tuesday, October 2nd, Market Watchers live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, October is looking pretty good again for the Dow. Second day in a row, we've seen the Dow Jones moving higher, up 129 points at last check, threatening to break out to a new all-time closing high. The S&P 500 off of its earlier highs a couple weeks ago, but still having a pretty nice day, up about 5.5 points. NASDAQ rallying off of some earlier lows has moved back into positive territory after being negative earlier. It is up 13 points. Small caps, though, really struggling. We have now reached a key area about 6-7 weeks ago, down just below 1670, trying to reverse off of that, but the Russell 2000 still down 7 points, clearly underperforming now for the last 5 weeks or so, the larger cap stocks. 10-year Treasury yield down about 3 basis points, 3.05%. It is now trading in a range between, I'm going to call it 3%, 3.11%. Volatility index down about 2.5%, well below $12 now, 11.69. Utilities benefiting from that 10-year Treasury yield falling today. Utilities, the leading sector, up about 1.35%. Gold and gold mining shares having a pretty strong day despite a higher dollar. You can see that the gold mining shares here up 2.42%. Still some overhead resistance to negotiate, but definitely performing better today. Semiconductors leading the technology group higher. Semiconductors having a very strong day and back above 35.50, where we've had some serious overhead resistance in the past. So we'll be watching that closely. Intel breaking above its 50-day moving average for the first time since mid-June, having a very strong day, solid volume. And a couple earnings reports out. Lamb Weston, which is a food products company, came in with excellent results, beating top and bottom line, and you can see a very positive reaction here. Unfortunately, Stitch Fix, SFIX, which did post much better than expected bottom line, 18 cents versus 4 cents, came in and said that their next quarter, actually I think it was their fiscal year numbers, bottom line consensus estimate was for $47 million, and they said will only be between 20 and 40 million. So a pretty significant lowering of their earnings guidance for the year. And Stitch Fix down more than 30% on their earnings. And I tell you, Erin, this is why I just can't take the earnings reports and holding into them. I mean, you got Lamb Weston on the one hand having great results, up almost, more than 9%. But then all it takes is one of these Stitch Fixes where, you fall short or you lower your guidance, and all of a sudden the stock's down 40% now in the last 2 weeks.
Yeah, that's pretty shocking. I know, just because I happen to be a customer, that they changed part of their business model. It used to be they'd charge you a fee, like a styling fee every time, and it was like $20. And if you bought all the items, of course, that you didn't pay that. But now they have it set up, you can just buy for the year $49, and that's good for all of your styling fees for the year. Well, that obviously is going to cut down quite a bit, I would think, in their revenues. But at the same time, they still get to, hold on to those people who are maybe would have quit, but now they're like, well, I paid for that. I paid for the fee. So I don't know. It's interesting.
Yeah, I don't have any idea. I didn't see the reasoning for the lowering. I mean, that was pretty significant lowering of the profit target.
And absolutely.
Yeah, I mean, we're seeing the result in terms of their stock price today, down more than 31%.
Yeah, a lot of competition out there now, too, in that arena they didn't have before. Mm-hmm. All right. Well, goodness, what do we got going on this week? Lots, of course, always. Charlie Kirkpatrick is going to be with us tomorrow as our guest. You won't want to miss that. Bruce Frazier, Mr. Wyckoff, will join us on Thursday. And then Mary Ellen McConaughey will be here on Friday for her What's Hot, What's Not segment. Looking forward to that, as always. Today's agenda, while I'm getting it all prepared, the Decision Point Monthly Review, going to let you know what happened in September and what I think is going to be happening in October based on our indicators. 10 and 10 to 1, UNG is our first symbol. And finally, Tom is going to do a new segment called On the Cusp. So should be a good time today. And I'm going to go get my charts ready a little bit more, and you can go into the technical news.
All right. Sounds good. Let's go ahead and pull up the 10-year Treasury yield here. There was really no economic reports out today. So just take a look at this chart. You can see even though there was no reports, we are still struggling to get through that 3.11% resistance area, yield resistance that we've seen not only going back here over the past few months back to May, but also dating back. I mean, this is a 7-year high at 3.11%. So this is going to be a big level to try to get back through. And so this short term, you know, we did have a double top here at about 3%. We broke above that in order to get up to that 311. So I think short term, we're in this range. Perhaps we get down to that rising 20-day moving average, but I expect ultimately that we're going to break out. We do have a nice uptrend in play. Looks to me like a little bit of a cup, equal highs coming across here, a little bit of a rounded bottom, double bottom. And so I wouldn't be surprised to see a little bit of a pullback here, consolidation, and then a push back up to the upside. One of the things that this is, one of the things that's happening here is if we take a look at the 10-year Treasury yield relative to Germany's 10-year Treasury yield, you can see that this strength continues. And without, you know, getting too involved here, there is a very strong correlation between the direction of the U.S. Treasury yield versus Germany, the direction of that difference, and the U.S. dollar. So that's what this correlation down here tells us. So we have a pretty strong history that when the U.S. Treasury yields are rising faster than Germany's, the dollar tends to rise along with it. And we are starting to see the dollar move higher. The dollar has now broken out to a 6-week high. I'll pull that chart up in just a second. But what all of that tends to portend is the small caps outperforming, which we have not seen over the past last couple of months, and certainly not here over the past 5 weeks or so, where we've had a steady move lower. The good news is that I do think we're getting very close to a critical relative support area on the small caps, the Russell 2000, relative to the S&P. So I think as we get down closer to this area, my expectation is that it will hold, will turn back higher, especially if we continue to see the 10-year Treasury yield moving higher versus Germany, and also the dollar continuing to strengthen. So let's take a look at the dollar. The dollar is up today, just hit a high of 25.39. This is the UUP. So this is the proxy for the dollar index. But here you can see the UUP setting a high that we're reaching a level that we hadn't seen since back on August 20th. So it's been about 6 weeks, maybe 7 weeks since we've seen the dollar move to this level. And that is a good thing in terms of what should be some outperformance by the small caps. But of course, we are not seeing that right now. Yesterday was horrible. Today is not any better. And so we'll see whether or not we can hold on to that relative support level that I was just showing between small caps, the Russell 2000 and the S&P 500. Short term, though, I had mentioned this yesterday. I thought we had some more downside in the Russell 2000, and we're getting that so far. So we'll have to see whether or not we hold it. I would look maybe for perhaps another 2 to 3% to the downside on the Russell. I don't know that we'll see a whole lot more than that. When I did my seasonality yesterday, I also pointed out that for some reason, I don't have an answer for you, but for some reason, the first 9 days of October it has been bearish for small cap stocks. And that's completely different than what we see on the NASDAQ and the S&P 500, the larger caps. So I think a number of things are kind of setting up for maybe small caps to underperform in the near term, but I don't expect that to last, especially if the dollar continues to rise. Okay, let's talk about crude oil. Yesterday broke out almost a 4-year high. Well, it was a high, but I think it goes back maybe about 3 3/4 years. But you can see the breakout on crude oil above $75 a barrel. And if we go back and take a look at the monthly 15-year chart, you'll see that it was back in 2014 on that huge breakdown in the second half of 2014 that we haven't seen crude oil prices back above $75 a barrel since then. So it's been a while. And this breakout in the WTIC, of course, is generally going to help energy stocks. And the XLE is at $77, trying to get through these prior highs earlier in 2018. I think they're going to do it. I think that when you start seeing the crude oil prices break out, the tendency is for the XLE to follow suit. There's a very strong, tight, positive correlation between the direction of crude oil prices and the direction of the XLE. So I would not be surprised at all to see energy continue to move up and take out that 78 level. Let's talk about the Dow Jones for a minute. Dow Jones did hit 26,772 earlier. Let me see where it is now. We might be there again. Actually, 26,790. We have gotten as high as 26,791. This is an all-time high. Currently, on an intraday basis, we need to close above 26,743 to take out that September 21st high. Among the Dow components, Intel having a very strong day, not only helping to lift the Dow Jones, but also helping to lift the semiconductor index. Beautiful breakout here above the 50-day moving average. We are trying to take out a reaction high now near 49. Volume is strong, though. Already 20 million shares traded. We're not even the halfway point of the day. So it looks like we could be on pace maybe for 40 million shares or more. And when you look across the screen, that's pretty strong volume for Intel. Seems like there's some accumulation taking place. AMD, on the other hand, has actually been coming down with a negative divergence in play and the PPO pointing lower. So for many weeks, even months, AMD was outperforming Intel. I think that could be reversing at least in the near term here. So let's take a look at Caterpillar. All right, Caterpillar. A really nice pattern here. Beautiful move to the upside in the first 3 weeks of September. Pulled back, didn't quite get to the rising 20-day moving average, but got close. Starting to strengthen again. You can see the overhead resistance up here at about 158 to 160. It's going to be important to see whether or not we get through. Caterpillar is one of the stocks that does perform very well in the fourth quarter of the year, and I would not be surprised to see this breakout occur. I do think the market goes higher. Boeing trading at an all-time high. Yesterday we broke out. Today we're extending the move. Very strong volume. Volume has been picking up. Boeing looks like it's under accumulation, performing well. On the flip side, within the Dow Jones, Nike was struggling a little bit, but still remains in a nice uptrend. I'd be looking maybe for about 82, 82 and a half as key support. You've got the rising 50-day moving average coming up from underneath. Okay, I mentioned gold earlier. Just about anybody listening to the show knows I'm not a big fan of gold, but it is moving higher. Let me actually shorten this down to the 6 months. Now, this is the gold contract price. This doesn't have today's action. So I know last time I looked, gold was at $12.11. So it was up about $20. We can see it on the GLD chart, but there is overhead resistance. You've got double top at about 115. You got the recent low at 114. This kind of coincides with the 1220 per ounce level of resistance on gold. If I go back to that chart, along with 1180 to the downside, here's 1220. You can see that double top right there. And then the low back in August was actually intraday was down below 1170. But I think we talk about closing prices, we're looking at about 1180. I think gold just continues to consolidate. There is typically an inverse correlation between gold and the dollar. And I think the dollar goes higher. So if that's the case, I think gold will continue to struggle. But as Erin's mentioned recently, there has been this decoupling between gold and the dollar of late. I think that's showing today, again, with go back here and pull up that GLD chart, because gold is up quite a bit today, 1.24%. And that's with the dollar proxy, the UUP, up a little bit today as well. So despite this uptrend, we have seen gold continuing to move or trying to move higher, but still within a range. All right, a couple stocks in the news. Amazon, they raised their minimum wage to $15 for all U.S. employees. That will be effective November 1st. The stock did move lower earlier today. You might think, okay, that's great for the workers. But, of course, for bottom line, you're just increasing your expenses. So there is going to be a little bit of a negative. But that was quickly overcome this morning with buyers returning to Amazon, and the stock is up a couple bucks today. Still trying to reach that $1 trillion market cap. It would be the second company to do so behind, of course, Apple. TECD, this is Tech Data. They announced their board authorized $200 million share repurchase program. Got a little bit of a positive divergence here. I thought I'd mention this. Lower prices, higher PPO. I think this one's got a shot maybe to run back to 76, 77 to challenge these recent highs. I looked on a weekly chart, and I just don't see it getting up much more than that. Stock's been under pressure here throughout 2018. It was up almost 110 back to start March. Now it's hitting 70, down around the 70 level. That's a pretty serious 35, 36% move lower in 2018. So there's some negative stuff going on here without a doubt, just from looking at the chart. But I do see the recent highs being up around that 76, 77 level. And with the PPO, weekly PPO pointing lower, that 20-week moving average, which is dropping pretty rapidly, it's currently at 79 and change. That also is going to, it's going to be difficult to get through that level, I would think, in the near term. So this is a stock that with the announcement, with the positive divergence on the daily chart, maybe we get a few dollars to the upside, but I don't see a whole lot going on here. September auto sales came out this morning. Ford, they reported their sales, September sales down 11% year over year. Stock pretty much has given up all of its gain from yesterday morning when it gapped up with the trade agreement with Canada and Mexico. The stock did move back down to the 920 area earlier today, although it's trying to bounce off of that. GM also came in with September year over year sales down 11%. They too gave up their gains from yesterday. One other one worth mentioning maybe is Fiat Chrysler. Their sales were actually 15% higher year over year, but they got a similar technical reaction down after that move yesterday. We'll have to see if Fiat Chrysler can take out 1815. I think this may have been one of the stocks that Mary Ellen mentioned last week on What's Hot, What's Not as one of the hot stocks. It has pulled back, but I think the fact that they came in with that 15% year over year, I thought that was pretty interesting. This is one of the better performers, at least over the last couple of months, and then came out with a stronger report. Tesla, mentioned this one, of course, a lot here recently in the news for a number of different reasons. Had the big gap up yesterday, but it is failing at this point at key resistance. Tried to get through that 310 area. So far, reversing. We'll see whether or not it can reverse its fortunes one more time and move higher later in the session. Among companies with earnings, mentioned Stitch Fix earlier, SFIX. You can see the huge decline. Not only did it gap significantly lower and trade many, many millions of shares, but it continues to push lower. Think about it. When everybody wants to sell at the open, market makers are on the other side providing liquidity, and yet the stock keeps going lower. That tells me there's a lot of distribution taking place in the stock right now. When you look at the top and bottom line, their top line came in just barely below expectations, 318.3 million versus 318.9 million expected. Bottom line, 18 cents versus 4 cents. So everything looks good, except the market's always looking forward. And Stitch Fix came out and announced that their profit for the year, instead of being the consensus estimate of 47 million, was going to be more like 20 to 40 million, somewhere in that range. Market did not like that, and you can see the result here. LW, which is Lamb Weston, this is one that's in the food products area. They came out with very strong results, 914.9 million in revenue. They were only expected to produce 879.7 million in revenue. So what is that, about a 35 million beat in terms of revenue? Bottom line came in at 73 cents versus 68, and then they reaffirmed fiscal year 19 outlook. That was good enough to send the stock up near resistance. Hasn't broken out, though. I think it'll probably just consolidate here for a bit, but it was a pretty good report. Paychex, P-A-Y-X, they came out with their earnings. They beat on the top line by 12 million, beat on the bottom line by a penny, reaffirmed their fiscal year revenue guidance, went down, tested the 50-day, and has come back up. I think it's in a trading range probably between about 72, 75 and a half. We'll see whether or not we can get the breakout. It has been a very nice performer, and I don't see anything bad in the report. Pepsi came out with their earnings, PEP, and they topped revenue estimates, 16.5 billion versus 16.4. They topped the bottom line estimate, $1.59 versus $1.57, but they did guide their fiscal year earnings per share lower, and the stock was threatening this breakdown. It did go back into this gap support zone that was created back in July with its earnings report then, and has reversed so far. I think as long as the stock holds above, say, 106, 106 and a half, I'm okay with Pepsi. I think it could return back up to 116. Okay, Erin, that is about all that I have going on today, and I know you've got your decision point. So what's everything looking like as we wrap up September?
All right, let's get it started. There we go. You can see my screen okay, I hope. Looks good. Okay, thank you. All right, so I'm going to give you the decision point monthly review actually for October. I'm going to go over what happened in September and what I'm seeing in the charts that I expect the markets will do in October. So we're going to look at the monthly, weekly, and daily charts for these 4 large cap indexes. I have also, actually, I don't have IJR in here. I'm going to look at IJH for the mid caps and small caps, and then, of course, cover the big 4. And then finally, I'm going to finish off with some indicator charts, the Swenlin trading oscillators, which are short to intermediate term, the intermediate to long term ITBM and ITBM, and then I'm going to finish off with a PMO analysis chart. So we've got a lot to cover. Let's go ahead and get started. So first, let's look at the DP scoreboards and see what's been going on actually since, for quite some time here. You can see some of the longer term signals in here from 2016 and 17. But as far as September, October goes, October, this is our first signal change right here for the NASDAQ 100. And we did move to a PMO buy signal. As you can see, the Dow Jones had already clicked in on a PMO buy signal back in, well, almost mid-September. And we're still waiting on the S&P 100 and S&P 500. Really, when you look at the charts as we're going to, the S&P 500, I think, looks the weakest of all 4 of these large cap indexes. So let's start with the NASDAQ 100. And what I wanted to point out was the new PMO buy signal that you just saw on the decision point scoreboards. You can see that in the shorter term, we're still on a nice rising trend. I haven't annotated it in here, but we are looking at mostly a rising trend channel and not so much a rising wedge like you're going to see on the other 3 major large cap indexes that we're going to cover. So the NASDAQ's looking pretty good. I think it's interesting that OBV has been mostly flat through the extension of this rally to come test those highs at overhead resistance. So interesting that the NASDAQ 100 is starting to have some problems. But as you can see, we're starting to see that rising bottoms trend line come right on up to meet price. We do want price to continue higher so that it doesn't end up below and then eventually breaking down below that rising trend line. All right, NASDAQ 100 weekly chart. Well, let's go back. There we are. All right, the NASDAQ weekly chart, you can see the rising trend channel in the intermediate term to longer term for all of 2018. So I added in those corrections that we saw earlier in the year, and you're still looking at a rising trend channel. So, the intermediate to longer term doesn't look too bleak. And notice right here with the intermediate term PMO, I had written in here last week or the week before, I think, we were expecting to see that IT PMO sell signal go in. It was actually showing as a sell signal. The PMO was below its signal line during that week. But by Friday, it had turned back up. So we did not end up logging that PMO sell signal. So I actually am going to take that annotation out and put in avoided PMO sell signal late September. All right, monthly chart, again, rising trend channel. We're still looking at very healthy markets here. In fact, if you look over at the NASDAQ, it's really clustering right above its averages, the 6 and 10-month averages, and really is just playing up against that, the top of that rising trend channel. Notice that the PMO is still rising nicely, so we're not seeing any deterioration of the monthly PMO. All right, OEX, S&P 100, rising wedge. Now you're going to start seeing rising wedges on the daily charts. We're on a PMO sell signal. I did not log the whipsaw signals that I saw for the S&P and the OEX. So we had brief buy signals for like a day, and then it went right back to a sell signal. So I opted not to log that into the decision point scoreboards because to me, what's important is that earlier PMO sell signal that we had back at the beginning of September, this little jig to go above and below the signal line right away. I just didn't feel that it was, it didn't really tell the story if I had switched it into that sell signal on an, at that earlier date. All right, so rising wedge, not looking that great as far as the pattern is concerned. But you can see yesterday we did pop above and set an all-time intraday high. So we'll have to see if we can get closing all-time high here. And currently we are lined up to do just that. The weekly chart for the S&P 100, you can see a rising trend channel in the shorter term. I'm not going to say short term because we're looking at a weekly chart, but in the shorter term, you could see that nice rising trend channel. The overall rising bottoms trend line is still very much intact, and you can see the breakout from those all-time highs back in earlier 2018. I suspect we're going to see in the longer term a continuation of the bull market. And look at the IT PMO buy signal. I think it confirms that on the weekly chart. And the monthly chart looks fairly healthy as well. The only thing is that we do have a rising wedge when you look at the monthly chart. And rising wedges, I think I neglected to say at the beginning, are bearish patterns, and you should expect a breakdown out of those patterns. You can see the long-term PMO had been in decline, but in September we got a turnaround and it is rising again. All right, let's look at that S&P 500. And as you can see, another rising wedge, which is bearish. We have the PMO in decline. So you're going to notice remember, we just looked at all three of those large cap indexes on the DP scoreboards, and all of them had rising PMOs. We had 2 PMO buy signals on the NASDAQ and the Dow. But look at what's happening with the S&P 500. We're not seeing the same sort of action. You notice that we're sitting at the bottom of that rising bottoms trend line, the bottom of the wedge, rather than being near the top of the wedge. Yesterday, we did not set a new all-time intraday high. There's just a little bit more weakness showing on the S&P 500 that does have me a little bit concerned. The PMO is still in decline. It looked like it was going to turn up, but no, not so much. The weekly chart, we start looking at weekly and monthly charts. It gets a little bit less concerning. As far as the S&P 500, still in that nice long-term trend channel. And as you can see, we do have that PMO buy signal that triggered back near July, August timeframe there. Actually looks like July. And we are still seeing a PMO that is rising and not in overbought territory yet. So I think that's a good sign. But do notice that with the S&P 500, we are seeing a deceleration of that PMO. Monthly chart, rising wedge, a little bit of white space in here, more white space than I typically like to see when I draw my patterns. But I think that it is, I think it's an accurate picture of a rising wedge. The only issue at this point, I would say, is we're getting very close to the top of that wedge, right there, near the top. And so when we're sitting in the middle, but we're getting closer to that top. And now we're starting to see that price is moving way into the end of this rising wedge. And when it starts to get really close to the apex, I think that the patterns really kind of bust open, because ultimately, even if price goes sideways, it technically would be breaking down below that rising bottoms trend line at the bottom of these wedges. And so to me, I want to see a true breakdown out of a pattern. I don't want to see a drift out of a pattern. And you're going to start seeing that possibility if you get too far into the apex of these wedges and triangles. So we're getting to that point. I might start changing the top of this wedge and move it more into a rising trend channel. If I can do that, we'll have to see. I'm going to do that next month. But look at the long-term PMO still rising and certainly not overbought at this point. All right, the Dow, we have a rising wedge as well. We could see the PMO turned up. It looked like it was going to have a sell signal, but it did not. Look at the OBV. We're looking at readings. We're looking at it higher than previous tops at this point, and it even sort of bounced off those previous tops. So I would say the Dow is looking far more healthy than the S&P 500. And you have a PMO rising and on a buy signal for the weekly chart, still looking good. We broke out of this rising trend channel. And, you know, I think that's especially positive. The only issue could be if you want to get a little worried about a parabolic or something setting up. But I like that breakout, and it's coming back down to test the top of that channel. Monthly chart, rising bottoms trend line still in play. You know, all-time highs are being set right now. For the month of September, you can see we did close at an all-time high. It was, pretty good month for sure for the Dow. Definitely one of the stronger of those 4 indexes. I would say actually the strongest. We ended up with the PMO buy signal sooner on that one. Long-term PMO is avoiding the sell signal and rising. That's, of course, always positive. All right, mid caps. Mid and small caps really struggling. The picture is very similar for both of them. You can see we've been in a declining trend. We've now broken down below that longer term rising bottoms trend line. We're on a sell signal. PMO is really getting close to reaching zero. Not liking the S&P 400 IJH chart on the daily chart. Still, we're still in a rising trend channel on the weekly chart, but notice that the PMO, which had been turning up, as you can see, had been turning up back here when you look in the thumbnail, but it's now turned down and actually is awaiting a PMO sell signal. And we would have to wait till Friday and see if that is intact and go from there. The S&P 400 monthly chart, you can see that the long-term PMO is starting to top and decelerate. That's bad news, but we do have a nice rising trend channel as far as price is concerned. I would just get a little bit leery here of, if it tops here below that previous top on the PMO, that would concern me. We'll have to see if that comes into play. But right now, as far as September, we did close down 1%, a little over 1% on the 400. Russell 2000 small caps, like I said, also starting to see some serious deterioration. You can see that 20-day EMA is about ready to cross below the 50. That's going to give me a neutral signal. You have, we're looking at a decline here that's still continuing, whereas all of our other indexes, remember, have been setting like all-time intraday highs. So serious weakness when you look at the small and mid caps. Look at the PMO buy signal is gone. We have a PMO sell signal that did come in. This is as of Friday, this chart. So we did end up with a PMO sell signal that logged for the Russell 2000, and you can see that declining trend. Overall, weekly chart, we're still in a rising trend channel. And same for the monthly chart, still in the rising trend channel. But notice some deceleration here on that PMO. It does happen to be rising, but it's not looking quite as healthy. All right, let's get started on the big 4. I'm not going to short shrift them this time like I did. I usually do on a weekly basis. I managed to set them up. I wanted to move them in so I could talk a little bit more about them. One of the things I wanted to point out was the avoidance by UUP of the intermediate term neutral signal. It almost crossed below that 50, but never did. And then we got the breakout above the 20 and 50 on a gap up. The PMO is now turned up. It's still negative, but it's turned up. And look at the OBV volume coming in. Nice on a rally. You want to see that kind of a move on that OBV moving to the top, and then of course scooter. So right now the dollar is starting to look far more favorable to me than it did before. Technically, we are still on a sell signal for the PMO, but it is turning up, and we could see that buy signal come in October. On the weekly chart for UUP, I think it's also very encouraging. We have that breakout above 25.25, which I've been looking at as overhead resistance in the intermediate term. We have the PMO, while it is still in decline, it is starting to decelerate and turn up. So if this, the breakout that we got at the end of last week can hold on, and it looks like it probably will, I think we're going to be looking at another rally for the dollar. And the monthly chart came down, didn't quite test that support there at that 92.50 level. And this is the USD chart because I could get the history that I wanted. You could see the declining wedge that executed and has come up, and it has pretty much fulfilled this pattern. I think it could certainly move a bit higher, and that 92.50 area is holding. And look at the PMO has turned up and continues to rise. All right, gold. We've got a breakdown. Well, let's try that again. We have a breakdown for gold from what I was looking at as an ascending triangle, which is a bullish formation. So to get a bearish conclusion to a bullish pattern, it makes me very uncomfortable. But as you can see, as of Friday, we did have price coming back up into that pattern. The PMO was setting up for a sell signal, but now it's starting to decelerate and might be able to avoid it. And then that decoupling with the dollar has really shown some increase right now. And so even though the dollar is starting to look good, that doesn't necessarily mean that we're not going to see gold recuperate. I'll be watching that PMO to see if we do get it to bottom above the signal line. And right now, gold is clinging to some very important support. You've got the very long-term declining tops trend line, which was tested last month. And we are looking at a possible breakdown now. We didn't get that breakdown at the end of September because it did close a bit higher. But the PMO is still in decline. Notice, though, we still have very bearish readings on the Sprott's Physical Gold Trust. We see that on the monthly chart for gold, we have a PMO sell signal, and there's that important support level that is currently still holding for gold. All right, USO. Let's get started with that one. All right. Okay, so with the USO, we can see we got the breakout on the day. Sorry, this chart is a little bit blurry. We've gotten the breakout. This is as of today. I think I got this chart in this morning. I believe I did. And you can see, yeah, we've got the big breakout here on oil. I suspect we're going to see it continue higher. Look at OBV volume on USO, PMO rising and not in overbought territory. And you can see the breakout here for WTIC, West Texas crude. But we haven't broken out above that high that we saw back in July, although we have done that with USO and in a very powerful way. So I would certainly expect to see it broken for WTIC as well. This is the weekly chart for USO, and of course up top is WTIC. And as you can see, the PMO has been trending lower and rather noisily, but now it is turning up. It's getting very close to a PMO buy signal. So we'll have to see if that one will come through next month. I suspect it will, because I am looking for a breakout above $16 on USO at this point. All right, PMO buy signal on WTIC, and as you can see, rising bottoms trend line still holding. Very important overhead resistance, which I noted on the daily chart. All right, TLT. What I'm seeing right here is a lot of bearish patterns and price activity. Now, granted, we have had in the last week a nice rally for bonds, but we have hit overhead resistance here. And again, this is a chart I took this morning to put into this presentation. PMO is flattened out, but despite a pretty decent rally back up to the breakdown point, the PMO has not actually turned up. It is moving mostly sideways here. I wanted to make a point too, and you look at the OBV that we've started to move to, below previous lows, and we're continuing even lower with the last, with that last low, poking down below previous bottoms. Double top, I think, is still in play. If we do see a convincing breakout above the confirmation line for the double top, I'll revisit. But right now, we haven't seen that. I have that 50, 200-day EMA negative crossover, the 2050 negative. Nothing's looking that good to me as far as bonds go. I'm expecting lower prices. But as you can see, when you look at the weekly chart, it did hold that rising bottoms trend line, tested it the previous week, and then last week it did continue to hold it. But here's the problem, and that is, and actually this one did go final. I need to update that annotation. Sorry about that. But we did get finalization for the week on IT PMO sell signal for TLT. This came into play at the end of last week. So that one you can log as a sell signal in the intermediate term. So, this is also a very large head and shoulders pattern. And it is a rising neckline. I prefer them not to be rising, but so it is. And it's holding. So I'm expecting the breakdown from that, but we just haven't seen that quite yet. All right, there's your head and shoulders pattern also on that monthly chart. We've got the breakdown again, and that line, the neckline is holding at this point as overhead resistance. And this is, of course, dollar USB. Again, I wanted to have the kind of back, the historical data to really be able to make to really be able to analyze this. And, but one of the things that concerns me, of course, is we do have a PMO that went below zero. Signal line is now below zero, and we haven't seen it move below zero since 2000. And that was only a little toe dipped in the water there. Now we're seeing a clear breakdown below the zero line, which is what we saw previously. Watch to see if this PMO bottom holds as the low, or if we're going to see the PMO move below that. If it holds, if it's able to bottom above this previous bottom, then I would get a little bit more excited about bonds. But at this point, it sure looks like it's going to go and set a new low, all-time low, as far as, or no, not quite the all-time because of when we started this, but it'll be one of the lowest readings we will have seen since 1984. So if we do see that PMO dip below that, I would certainly start looking for this head and shoulders to execute. And should it execute, it would put us at a minimum downside target right around 120 for dollar USB. All right, that was the big four. Let's go ahead and look at our short-term indicators. I'm running right on time. I'm so proud of myself. Okay, so what you can see right now, this is as of Friday. So I did pop the chart back then. I do know, having looked at it today, based on Monday's activity, that we did get the short-term indicator to pop up. So we actually do have a bottom on these short-term indicators when you look at them in the as of Monday night. So we did get a bottom on Monday night after the close, and you can see we're in oversold territory. So honestly, I look at that as really good for the markets and the S&P 500 going into October. At least for the first part of October, I think these indicators are telling us not to be too concerned. However, the intermediate term indicators are not looking quite so healthy. I'm very concerned about the fact that they have broken down below this rising trend. That was pretty much, that was being preserved. So even though we kept seeing these indicators start lower, I didn't get too concerned because we were still holding that rising trend, but we are no longer holding that rising trend. So now what we need to watch for is the zero line and see if we end up closer to that zero line. Then we're going to move into neutral territory, and then we can start thinking a little bit more bullishly in the intermediate term. But when I look at this chart, it does tell me that there could be some issues. Maybe we're looking at a sizable pullback over the next month or two. Obviously, we'll keep very close contact. I do watch these and write about these indicators on Wednesdays, and Carl writes about these indicators on Fridays. So you can go and check those out. All right, I decided to add an extra chart for you since it is the monthly review, one that includes a little bit more longer term picture than what we see, that we normally look at when I look at those short-term indicators. So what's really great about these charts are the fact that you do get all three time frames on one chart. The first, of course, the PMO, I always include that in all of my charts. I always like to know what's going on with that. The first pane here is your short term. And this measures how many of the S&P 500 stocks are currently rising. And that is a short-term reading. And as you can see, so far as the S&P 500 as of yesterday, we were seeing an improvement on PMOs rising, but the reading was 35%. So we only have 35% of the S&P 500 with PMOs that are moving up. You can see the S&P 500 overall is moving down. Not a surprise when you only see 35% PMO rising in that index. Crossover buy signals, that's your intermediate term and indicator pain. You're looking at, again, how many of the S&P 500 stocks have crossover buy signals. How many of them are sitting above their signal lines? And currently, that is at 35%. That would be, I'd say, fairly oversold, in the near term. But we can see it moved much lower on these corrections. I would look for, I want to see the bottoms on these indicators. That's a positive when you see a bottom on the indicator here. It generally leads to some upside movement. But we don't have a bottom just yet on the crossover buy signals. It is rather flat at 35%. I think it could go lower. But if we get that turn right now, that could be good news. But we can see a few fake outs that we had earlier. The last pane is our longer term one. And as you can see, percent PMO above 0. That tells me how many of them not only are on a buy signal, but also have readings that are above the 0 line, like we're seeing here on the S&P 500. So in terms of that, we have about 2/3 of the S&P 500 that have PMOs above 0 in a bullish configuration. But you can see that it has been slowly moving lower. But overall, it's been remaining mostly flat, right around that 60% level, right around that 2/3 level in the long term. And, I like to see. If we start seeing these readings start to get much lower and continue lower, right now you can see that previous low we had back in August is being challenged right now. I would be watching to see if we get down to that 50 area. But really, if you look, these follow, of course, what's going on with price. And, price is pulling back slightly right now, and that's why we're seeing these percentages moving as they are. All right, so that is pretty much the monthly chart review. I'm going to go over the summary very quickly here for you. Large caps, I want the takeaway to be that they are long-term, they're rising and on buy signals, but there are possible problems with those rising wedges on the S&P, OEX, and Dow. However, NASDAQ is still in a rising trend channel, waiting for a breakout. And remember, it did just get that PMO buy signal on its daily chart. Mid caps and small caps, lots of weakness there. Short-term PMO sell signal, IT PMO, possible sell signal that looks like might be coming in soon. Long-term PMO is falling. I mean, rising trend channels do still exist in the intermediate and longer term, but there's a lot of weakness that's being logged for the mid caps and small caps right now. Dollar is starting to look good. I have to say I'm getting bullish on the dollar, maybe a little late to that party, but the PMO is now rising. I think that the setup on the chart is better. We're getting breakouts. That makes me feel a little bit better. Gold is starting to show a lot of weakness. You've got the sell signal for the PMO. They're declining. We need to watch that 1150 area for support. Gold is decoupling from the dollar, so it could still rise, but it's starting to show so much weakness. I'm not so sure we're going to see that. Oil is breaking out. I'm very bullish on that. 30-year bonds, I'm really bearish on that. So really an opposite position on both. And I'll put these summary slides into our Market Watchers live recap for October 2nd. So if you want to get these charts there, you can. And then finally, on our indicators, remember their short-term indicators are oversold and they are rising as of last night, which is very bullish. Intermediate term, though, we broke that rising trend. It's still very bearish. And finally, when I looked at the PMO analysis charts, PMO rising from oversold territory is a good thing for the short term, but Oversold right now in the near term, turning up. So intermediate term looking a little bit better, but still weak. And the long term, I think, is neutral to bearish, with it staying right around that 60% level. And that's all I have for you for the Decision Point monthly chart review. Hope this was helpful. Hopefully it's giving you some ideas about what to expect in October and a pretty clear picture of what happened in September.
Awesome, Erin.
Yes, now I can take a little break from my voice.
Yes.
I know it is now time for the 10 and 10. And, I did notice, I'm just looking in the chat room, someone wanted me to show the settings. I'm not sure for which chart. So if you can put in there which chart you want, I will give you those settings, or where to find the chart to get those settings. But since I've been talking away, I'm just now going to start compiling all of your symbol requests. We won't be showing an RRG or anything like that. Tom's going to get started with that first symbol, UNG.
Sounds good. All right. Well, UNG definitely has picked it up here of late. Really big move here in September off the double bottom, short-term double bottom. We've been rising, got up from about 22.5 at that low to above 26 today, currently at 26.28. I can tell you I haven't had a lot of luck with the UNG over the years trading it technically, but I'll point out what I see, and you can agree or disagree. But here you can see that over the past year, maybe a year and a quarter, we've had a number of trips back up to about 27.5 to 28. And if you go all the way back to November of 2016, you'll see there was a pretty important low in that same area. So anytime I see a number of different or one level that has held as either support or resistance on a number of different occasions, I tend to give that area quite a bit of respect. So as we move up here, I think we have a shot. We're getting overbought, but I think we have a shot to get up in that 27.5, 28 area. But I'd need to see a breakout there, because we have turned there on many occasions in the past, including back in January when we were moving up on very heavy volume. It looked like, if you'd asked me back then with this kind of volume, I'd have said chances were probably pretty good that we would go through 28, but we didn't. And instead pulled back, went sideways for a while. Now here we go. Volume's picking up again, but can we get through that 27.5, 28 level? I don't know. So short term, to me, it's a buy. But more intermediate term to long term, I really need to see this clear 28.
All righty. And the second symbol, which is the most popular in the chat room, we've talked about it previously, a very interesting chart, Tilray, TLRY.
Yeah, these stocks are definitely in the news, and they are volatile. These are a lot of this is one of the many marijuana stocks, marijuana-related stocks out there. Huge move up. I mean, the stock ran from $20 to $300 in 2 months. If you were in for that ride, congratulations. But it was probably pretty scary roller coaster when it went from 300 down to 100 in 3 days. So it just depends on your timings. You get in at 20 and it's a great stock. You get in at 300 and you think it's the worst thing you've ever invested in your life. So currently it has bounced off the 20-day moving average, trading in a pretty wide range. I mean, I don't know how you manage your risk in a stock like this, which is why I really don't look at it to trade. But if you're, looking maybe at the 20-day or something like that, or maybe the after the pullback, you can see we struggled at about 120 for a couple of days, then finally got through. Now you can see the rising 20-day moving averages at 121. So perhaps if we got down close to that area, I could take a shot. So I'm going to shorten this chart because obviously we don't need this much data. But yeah, I think Tilray is just one that's incredibly volatile. I would say that 120 and then down to 100 would be the two short-term levels of support that I would watch. So that's where we gapped down. We rallied back. You can see that 120 level, and then came back down to 100, gapped up to 120, failed, hit 120 again the next day, failed, and then finally got through. And you can see the volume began to pick back up on that move. So I think moving back into that area would be maybe a short-term support. And that's right where that 20-day moving average is. Then, of course, you've got 100 to the downside. So those are probably two levels I'd watch to the downside. Where we are currently right now, I don't know which way Tilray goes. And there's a lot of risk to the downside. If you get in at 160, I really just don't see a whole lot of support until you lose 25% of your money down to 120. And so I would not take a shot on it here.
Okay. This one I called out yesterday, I think is a Monday setup. So I'm almost afraid to have you look at it because I haven't looked at it and they obviously are asking for it for some reason. But beat, BEAT.
All right, beat. Well, the beat goes on. We've pulled back on lighter volume. We had a nice breakout on good volume. I actually like it at the level, current level. The only thing I would say is that as we have gone higher, you can see the PPO continues to decline. So maybe we get a 50-day test, but the volume on the last breakout was very heavy. So it's hard for me to argue slowing momentum when you're breaking out to new highs on heavy volume. So I think it's going to hold the 20-day moving average. I think clearly you have some overhead resistance that came in just above 62. We went above that on this increasing volume. Now we've gone down and tested after being up at 66 yesterday. It's a volatile stock, so it may not be for everybody. But I do think that the rising 20-day moving average, which has been holding, I would be surprised if it doesn't continue to hold. So I like it, especially as it gets closer to that 61.25 area.
All right. Let's try, I think it's Blue Apron, APRN.
All right, APRN. I'm going to stretch this chart out a little bit too. Yeah, I mean, we went down, went into a little bear flag pattern, and then broke down again. Volume's picking up as it moves lower and lower. We're talking about a stock that was 420 in July, and now it's down to $151. Something obviously is going on, and you can see from the volume there was a lot of distribution taking place on that move to the downside. So I don't really see anything here. You might say, well, the PPO is higher than it was back at these other lows, but when you get a PPO reading that goes down to beyond -10 to the downside or +10 to the upside, it's hard to keep that PPO setting a new high or low because you're already talking about because of the huge decline, the PPO is nothing more than the percentage difference between two moving averages. So you need, if this stock goes from 420 down to 180, probably over these next couple of weeks, or when it goes down and sets a new low, you probably need the stock to be down to like 50 cents in order to keep that spread, that wide spread between those two moving averages. So I wouldn't just look at the PPO as just a line on the chart. You need to understand what these numbers over here mean. And -10 tells you that a stock has really taken a beating in a very short period of time. So it's almost a guarantee mathematically that you're going to see a higher PPO when you get a new low. And I know this is a lengthy discussion, but I just want to talk about that because to me, the positive divergence here, I don't know that it really would mean that much to me because I could have probably told you here that after we bounced and put in a new low, we were going to have a positive divergence. That isn't really telling me much if it's almost a certainty as you go forward. Here, the volume is picking up as we're putting in new lows. I think this is a broken stock. I would stay away.
Okay. Let's see. Let's try Apache, APA.
All right. Somebody's looking at my notes for on the cusp.
Uh-oh.
Yeah, this is one of them. I really like the stock. You're up against resistance. I don't like to buy just under resistance. So I'd be either looking for a pullback or I'd buy it on the breakout. So here's a pretty clear area of resistance, as you can see, right around 48.75 to maybe 49.25 in this zone. This is where we've been turned back, and we're right up against that level. But the PPO looks really good here, continuing to strengthen. So any kind of a pullback to test that rising 20-day. Volume trends are strong too, by the way. I like Apache. I just would wait and see if I can either get it on a pullback or let's see if this breakout executes first.
All righty. We haven't looked at it in a week, believe it or not. Amazon.
Wow.
Yeah, it was on my Monday setups as a possible. I didn't put it in, but I don't know. How's it doing?
It's doing pretty well. I think off of an uptrend, looks to me like it could be in a cup or close to maybe something similar to a cup. But let's pull it up and take a look. For those of you who are not familiar with a cup, first of all, you need an uptrend. Cup is a continuation pattern, so you need a prior trend. So we clearly have that uptrend in play. And then as far as the cup goes, I'd like to see it get back all the way to the recent high. We didn't quite do that, but you can kind of take a look and see, right here. And it, right now we're like this. So we haven't quite gotten all the way back up to print a full cup, but a move back up to that 2050 level would put in the right side of a cup. allowing the stock to consolidate. You can see the PPO working its way back down near the center line, where it hasn't been since back in April. So I think all this consolidation is very good for Amazon. I think that, maybe that rising 20-day moving average will get tested. We got close earlier today, but I think eventually we will move back up that 2050 level. And then after maybe putting in a handle, I look for a breakout. I think Amazon still looks really good.
All right. Our only financial request, Regions Financial, RF.
All right, RF. I'm going to pull this one up on the relative chart just to see how it's doing relative to its peers. You can see here we actually, and this is why, even though you see a beautiful move to the upside, why I always respect that prior price resistance. I'm not the only one that looks at a chart and sees that there were sellers back here in March at $20. There's a lot of folks that see that and they start selling at $20. And so we pull back. I think we're in consolidation mode really over the past 6-7 months. And I expect we're going to get a breakout eventually, but the group itself has to strengthen. You can see that just a few weeks ago, Regions was actually at a new high relative to the bank index. So relative to its peers, it was doing really well. And yes, it's pulled back and the volume's picked up, but the overall group's been selling. So I think if the group, if we get that breakout in the 10-year Treasury yield, we start to see outperformance by the financials and especially the banks, then I think RF comes back into play. But in the near term, and you can see this is one of the problems, the bank index relative to the S&P 500 is currently at a 52-week low. And so it's no matter how good Regions is, it's still going to struggle if the overall group is not getting its fair share of the money. So I think for me, I would be watching the absolute price support, which I think is down closer to $17, and then keeping an eye on the overhead resistance, which is clearly up near $20. I think as you get closer and closer to 17, the more it makes sense, because then I can really manage my risk. Or, like I said, if banks start to pick up, we get that breakout in the 10-year Treasury, then Regions is one of the better performing stocks out there.
All right. The next one, Delta Airlines, DAL.
Yep, airlines love the month of October. So let's pull up Delta, see what's going on. Well, stock's getting hit pretty good today. I didn't realize it was down like this today. I don't like the trip back down below the 50-day moving average. So even though seasonality looks good, I don't like losing this prior low. So I think what I would have to see on Delta before I would get too excited on the long side, and I'm just trying to look at anything else that might be appealing. I mean, the airline's definitely taking it on the chin here as well. I think I need to see that gap filled. So let's annotate. And the gap down that just occurred today was from about 56.5. And there's pretty good volume coming in today on this push down, although we are off of the lows. Maybe that most recent low, maybe these two lows you can look at between 53 and 54 so far trying to hold. But I'd like to see a close back up above 56.5, fill that gap, and show that we can get back through where all those sellers came in. And then I'd feel a little bit better with Delta, especially given the fact that the airlines do have a tendency to move higher in the month of October.
All right. Let's see. The next one I've got for you is one we haven't looked at in a while. Let's see here. AWSM.
AWSM. I don't ever remember.
Cool Holdings. Yes, Cool Holdings.
Well, it was very cool. I'm wondering if it has something to do with marijuana. I mean,
I'm guessing it must.
I don't know the company, but wow, what a move up in September. Huge move. Stock was trading down in the threes and really just going nowhere for several months. And all of a sudden here, last 3 or 4 weeks, huge volume. Stock goes from 3 to 23 and is settling back down. It's just trying to establish some support, though, between 9 and 10. And you've got the rising 20-day moving average there. If you're going to trade this stock, I think, number one, you have to understand the risks and the volatility associated. But here you can see the clear area where buyers have come back in. So after we went up on the massive volume, we pulled back. Buyers on 4 separate occasions have come in between 9 and, say, 9.25 and 10. And you got the rising 20-day moving average. It's almost to $9. So this is the area that I think the reward to risk sets up the best. It doesn't guarantee you a winner. Make sure you understand the difference there. This is incredibly volatile. I'd watch that 20-day moving average closely. If it fails to hold, you could be looking at $7, which is your gap and price support from back in the 3rd week of September. But I'm guessing that you're going to get that $9, $10 area to hold on a pullback. So if I was looking at it and willing to take on that kind of risk, that's the area I'd be looking to buy.
All right. And by the way, that was in the telecom space.
Wow.
Yeah, kind of interesting there. Okay, the next one, getting ready to land on, looks like gap support, New Relic, NEWR.
Yeah, it's got a key area of gap support. I agree that it's going to test. I mean, volume has been pretty heavy on the selling. So if it's a stock that you get into, you definitely want to make sure you keep your stop in place in case it doesn't reverse. But that, I agree with Erin. I think that gap support level is one I'd watch closely. We're getting very oversold. RSI now below 30. So we can, if we go down into, say, this 84, 83 and a half area intraday and then come back up and close above it, it could be putting in a short-term bottom. But I would respect that declining 20-day moving average until we get through. So if I were going to take a shot on this one, down around that 85 level, I would be using the drop, that falling 20-day moving average as my target. And I'd keep a very tight stop below that 85 level on a closing basis, because you've got the next, the bottom of gap support's down 77.5, and I don't want to ride it that far.
Okay. And that's the last one.
Cool.
Okay. And that does conclude the 10 and 10 to 1. Here are the symbols that we just went over. You'll find all of those charts with the annotations in the Market Watchers Live chart list. And the link to that is at the top of the Market Watchers Live blog page, as well as in every Market Watchers Live recap. All right, it is time for our final market update. Let us see what has been going on in the markets. All right, looks like we're pulling back off of intraday highs as far as the Dow, S&P 500, and OEX. You can see the NASDAQ not really performing as well as the others. It did spend a lot of the morning in negative territory, managed to peak out above yesterday's close, but is now in the negative territory once again. Looks like it's trying to find support at about 80.20 for the NASDAQ. S&P 400 and Russell 2000 also in decline, although we're seeing a little bit of an attempt to get to positive territory by the S&P 400, whereas the Russell 2000, we're just starting to consolidate on the intraday lows. TSX definitely had a difficult morning trying to take back some of those losses that were accumulated, but not quite so successful. The TSX is sitting right around 16,025. TNX Treasury yields are down slightly, looking like they want to come back up, however, currently reading 3.063%. UUP, big gap up on the open, pulled back, now sitting mostly, well, we're at about 25.35 for UUP. Took about half the gains back from the morning. Gold having a very nice day, breakout, big move to the upside on a gap up. Currently, it looks like it wants to consolidate right around 114 for GLD. Hit its intraday high and does seem to be pulling back. TLT bonds move a gap up and then mostly moving sideways from there, currently reading 116.81. And USO down about 0.5%, currently reading at 15.86 after yesterday's really strong breakout. I'm going to show you the gold chart really quickly because somebody wanted to see more accurate look, given that we see gold is breaking out today. If you recall, I had a PMO sell signal pretty much lined up. In fact, I can show you that. So when I looked at the gold chart here, we only have yesterday's, this is as of yesterday's close, and we were just about ready to hit a PMO sell signal. And now look what's happening today as far as GLD is concerned. We got back above that rising bottoms trend line that I had forming an ascending triangle, but I would have to say I'm taking that chart pattern back. I think we're just looking at a trading zone now between 112 and about 115. I'm not expecting a huge breakout here, but the PMO turning up above its signal line I think is very positive. And that's all I have for the final market update. What would you like to add, Tom?
Okay, well, I am going to share something that'll kind of go right into this final segment. So I'm going to take a look at the Dow Jones U.S. Exploration and Production Index chart here, because off of this push to the upside that we saw back from February to May, while crude oil prices, pulled back for a while, and of course energy struggled, you can see that the Exploration and Production Index simply went sideways here for about 4 or 5 months, and yesterday managed to close at a new high with the PPO strengthening. So we're starting to see some pretty good price momentum here in this group. Also, at the same time, when we're getting a pretty nice breakout from a 4 to 5 month consolidation range. So that is just a little bit of a segue into the next segment, which is a new segment called On the Cusp. And in this particular segment, what I want to be able to do is just point out an area, and I'm going to stick with this Exploration and Production Index area, where a group is literally on the cusp of doing something significant technically, whether it's breakout, breakdown, maybe it's a trend line that's important, or channel, something, but that it's on the cusp of doing something I think from a technical perspective we should be aware of. So Exploration and Production, as you can see, in my opinion, is on the cusp of a pretty significant breakout here to the upside. Now, the significance here, I'm going to pull up a chart here on crude oil. Now, this is just the last 2 years, a weekly chart. And you can see crude oil has been moving up pretty steadily since the low back in June of 2017. So really for about the last 16 months or so, we have been moving higher. We've had a few pullbacks along the way. We did go a little bit below the 20-week moving average temporarily, but we are now breaking out again on crude oil. And what I did down below here is I brought up the correlation between the price of crude oil and some of the key industry groups in technology, or excuse me, in energy. So the DJUSOS, when you look at the correlation, I think this industry group, among all of the energy industry groups listed here, has the tightest positive correlation, meaning that the readings on the correlation are always positive. The lowest reading we've had is a plus 0.25. That was a year ago, a little over a year ago. And when you look at the other groups, they tend to follow oil prices as well, but not as closely as the Exploration and Production group. So when you take a look at these, you can see the others move into negative territory, or at least go back down to kind of the flat level, meaning that there's really no correlation for a period of time. And even sometimes, like I mentioned, go negative. So they actually start to move in the opposite direction of crude oil prices. But that is not the case with the Exploration and Production stocks. So what I want to do is I want to focus on that area. And I'm going to focus on that area in large caps, mid caps, and the small caps. And I'll explain why. Here's another chart. This is the PSCE, which is the small cap energy ETF, divided by the XLE, which is the more larger cap energy. I mean, the XLE is made up of, I think 50% of it is ExxonMobil, Chevron, and Schlumberger. I think somewhere in the 45 to 50%. That's what the XLE is made up of. So clearly, the PSE, which is based on small caps, is going to perform quite differently than the XLE. And what I have here on this chart is the relative performance of the small cap energy ETF versus that larger cap energy ETF. And what I think you'll see on this chart is that it kind of lines up, tends to move in the same direction. This relative ratio tends to move in the same direction as the dollar, which makes sense to me. When the dollar is rising, that's bad for large cap stocks, and it's better for small cap, not because it impacts their earnings, but because it does negatively impact the large cap stocks' earnings. So as a result, money rotates into smaller caps. So just check this out, though, as the small caps were underperforming in late 2015 into early 2016, you can see the dollar was declining. Then we had a nice pop in small cap energy shares, the dollar's going up. Then we had a steady decline in the small cap energy relative to large cap when the dollar was in a big decline. And then we come down, we bottom, we start to rise, and you can see not a whole lot of strength in the relative strength, but certainly small caps held their own, if not moved up a little bit. And then just recently, you can see that the dollar had been under pressure, and once again, the PSCE relative to the XLE was underperforming. Now, I showed a chart earlier in the show suggesting that if U.S. Treasury yields continue moving up faster than Germany's Treasury yields, that there's a strong correlation between that and the U.S. dollar rising. And so I don't think the dollar's done. I think the dollar is strengthening again. And I think it's only a matter of time before some of these small caps begin to see relative strength as a result. Now, the dollar has bounced about $1 off of the low. The U.S. dollar index got down 93 and change. Now it's up near 95. But you can see that the PSCE relative to the XLE has continued moving lower. I think this could be setting up. That's why I want to go ahead and include small caps in this analysis that I look at today. Okay, so let's take a look at some of the stocks. And essentially what I did to give you some idea is from the member dashboard, I went into the scooters. So when you find an area similar to drilling down, I've done this plenty of times before, but when you're looking for a particular group, so here's the scooter reports for all large cap stocks, but I'm really interested in the exploration stocks. So if I just go in here and type this in, now it's giving me all of the exploration stocks within the large caps, and it's sorted in scooter order. So what you want to do is make sure that you have sorted by the scooter before you type this in, and then it'll bring up all the exploration stocks in scooter order. Now, when I'm looking at this, China National Offshore Oil has only traded 93,000 shares today, no volume in ANDV. So here is the first one that has significant volume, and most of these have, are pretty solid. So this is where I was starting. I went through and I looked at all these stocks, and EOG is one that I know Mary Ellen McGonigal mentioned last week in the What's Hot, What's Not, when she was speaking about energy. EOG has been on a tear to the upside. It's in this group, exploration and production, that tends to move along with crude oil prices, which have just broken out. So hopefully you're following that whole chain. So I'm looking at stocks that are in exploration that should do well based on crude oil breaking out, assuming that crude oil continues to strengthen. And EOG is one of the top performers based on that scooter. That scooter score is at 91.2, which is pretty good for an energy stock because energy has been lagging until recently. Okay, so EOG's got a great scooter rating, and notice it's been holding in this 113, 115 area that's been support off of an uptrend, and now we're trying to take out this high up here around 131, 132. PPO is looking great. If we can get it, EOG looks good. So it is on the cusp of a potential breakout here. Certainly one that I would keep an eye on. Now, along those lines, let me point out some other large cap stocks. I think I had a total of 5 or 4 of them. APA, this was a 10 in 10 stock, so I won't spend a whole lot of time here, but it's on the verge of a pretty significant breakout after downtrending. It looks to me like left shoulder, neckline, head, right side of a neckline, right shoulder, and we are trying to break out. It is on the verge of a very significant breakout, not just taking out any old resistance level, but a bottoming reverse head and shoulder neckline. So if we could see the stock moving up past $49, $50, get some volume coming in, I think Apache looks good and is on the verge of or on the cusp of a breakout. OXY. Now, not all of these are going to be on the verge. They may have just made a breakout, or they may be approaching. I think OXY looks really good. Occidental Petroleum, big gap up back in May. Put in these highs, but notice the PPO rolled over, and so just needed some sideways consolidation. We effectively went all the way back to this 75 support level, and now we're looking to move higher. Look at the volume coming in. PPO looks great. I think Occidental Petroleum is on the cusp of a breakout. Last one from a large cap perspective I wanted to mention is NFX. A little bit lower price stock, but it's $28.78 right now. This is one that I think I had looked at from a, trying to think, maybe it was a weekly. Let me pull up a weekly and see if there was something I wanted to mention about this stock. No, it wasn't on the weekly chart. Because now I'm looking at it, I'm not really sure what it's on the cusp of. It maybe is on the cusp of holding this rising 20-day moving average with a strengthening PPO, which I guess is a good thing. But, I think it was the trend line. I think if you come down here and connect these highs that we've seen over the past couple of years, it looks to me like it is on the cusp. And certainly if we take out the highs around $31, I think NFX would be returning to an uptrending pattern instead of the downtrending pattern that we've seen now for the past couple of years. All right, let's move on to the mid-cap stocks. And there are some really good ones in here. I think last week when Mary Ellen was on and talking energy, I mentioned Whiting Petroleum, WLL. I think this is in a really bullish pattern after it went straight up from February through late June. And this is a stock that ran from 22.5 to 56 in about 4 or 5 months. It needed to consolidate. It's done that. It looks to me, and by the way, as it got near the bottom here, look at the volume just completely drying out. Now it's starting to turn back up, and we've got just a little bit more room to go to take out a key area of resistance. But I think this looks like a nice cup. So to me, it's on the verge of a very bullish breakout here. WPX, this one I think made the breakout. Yes, after months of sideways consolidation, it was on the cusp of a breakout as of about a week and a half ago. Well, it has made that breakout to the upside. PPO looks good. This is one that I'd keep on my radar. I think a pullback down around 19, 19.25 would be an excellent entry into WPX. CHK, Chesapeake Energy. Chesapeake looks to me off a very significant uptrend. I've been watching this stock for a while, and of course it has been downtrending, but most of it's been on much lighter volume than we saw on this move to the upside. And I think that downtrend ended. So I've been looking for some kind of pattern to emerge. And it looks to me like maybe this is an inverse left shoulder, neckline, head, right side of the neckline. We come back down, test that rising 20-day moving average, a breakout above 480, especially with volume beginning to pick back up again, I think would be very bullish for CHK. This one is on the verge of maybe a bottoming pattern breakout, or not really bottoming, more of a continuation pattern, where if we can get that neckline breakout at 480, that would be very bullish. And again, as a reminder, all of these stocks I'm bringing up are all in that exploration area, which tends to do well when crude oil prices are rising. CLR just made the breakout over $70. PPO looks great. Volume began to pick up again on this move to the upside. This is another one I'd keep on my radar. Pullback here looks awesome. I would say anything in the upper 60s, maybe 68, 68.5 would be a pretty decent entry into this stock, especially after that recent breakout. LNG, this is Cheniere Energy. Very similar. Got up to that high in late June, pulled back. We've now topped, gotten through, or not topped, but we've topped the prior high. Gotten through that 69 area. You can see volume here has been pretty decent. I would continue to look at that rising 20-day moving average as a nice support area. Just a few more here, mid-caps. FANG, Diamondback Energy. This is definitely on the cusp. Great support's been holding around 110. Resistance has been around 137. We're sitting at 136 and change. Watch this one. A good volume breakout above 137, 138 would be very bullish. RRC. All right, Range Resources. Now, this one's been in a downtrend. It's been consolidating for a while, but this area right around 18 has been a problem all throughout 2018 on Range Resources. So if the overall group is moving, if we could get a significant breakout above 18, that would be bullish. So I think Range Resources here is on the cusp of maybe reversing that downtrend, but we need to see the breakout. CVE. All right, CVE, last two mid caps here. CVE, same thing, very similar to RRC. Multiple tops here. This actually goes back beyond just 2018, literally over the last year, maybe 12, 14 months. Tops right around 11, 11.25. If we could somehow manage to navigate that, I think that would be bullish for CVE. Let's watch 11.25 and let's get some volume in on that breakout. ECA is the final mid-cap stock that I had. You can see multiple tops up here just above 14. Lots of consolidation. Hasn't been able to make the breakout, but look at the volume coming in. It looks like there may be some accumulation taking place here. A breakout above 14.25 would be very bullish for Encana. Now we got a few small cap stocks. I'm going to go through these pretty quick. And again, these are dependent on the dollar strengthening because the small cap energy stocks are not doing very well, haven't been doing well of late, and a lot of it is because that dollar had struggled. But here, you still have some small caps that are performing well, though. California Resources recently made that breakout. Great-looking PPO. Watch this one on a possible 20-day test. NOG, Northern Oil and Gas. clearly broke out above $3.75. Look at the volume coming in recently to support this move. This is another one I think being accumulated. Pullback, that price support level is 375, and so is the 20-day moving average. WTI. W&T offshore, double top here at $9. Came back up just recently. Look at the volume again coming in. Just broke out above 9. If we get a pullback, 9 would be an entry point. Got as low as 9.16 earlier. And again, that rising 20-day, and it's going to be rising pretty rapidly, down at 8.11, but it will move up quickly. Watch that. DNR, this is Denbury Resources, another stock, small cap that's been performing great. It is did get up to almost 650. The recent breakout was at about 580, and that rising 20-day comes in at 573. OAS, Oasis Petroleum, just broke out above multiple tops at about $14. So again, $14 along with that rising 20-day is very important. REN, which is Resolute Resolute Energy Corp, did just try to make the breakout. I don't like yesterday's candle leaving that tail up above this area, but the volume did pick up recently, and a pullback to test the rising 20-day could be an interesting entry there. Last two, SUN, Sunoco, $30 key resistance. I think it'll probably pull back, but it's certainly on the cusp of a breakout here. And the last one is Matador, MTDR, number of tops between 34 and 35 in 2018, sideways consolidating, PPO strengthening. I think we get a breakout on a move above 35. I want to see some volume coming in on that. So let's pull up a quick summary. I went through a bunch of stocks within one area of the market, which I think has certainly strengthened recently, not only on the chart, but also when you look at correlation and the fact that crude oil prices have been going up. This is a group that tends to benefit. So if you like crude oil and you think it's going to continue to go higher, I think probably your best bets are going to be in the exploration area. And these were some of the stocks I thought looked really good.
Excellent.
Yeah, different segment, but I thought it was a good one. Try to recognize some of these things before they happen, hopefully.
Yes. Somebody did say EOG is working well, but why not XES? You know, why aren't we seeing the same?
I don't know. The stock XES?
Yes, XES, the Spider Oil and Gas Equipment Services. The Spider isn't doing as great as those charts you were showing. It's kind of
that's equipment services. That is not exploration and production.
Well, there you go. So
you got
answer the question in the chat room.
Yeah, that is apples and oranges. That's why I would stick to the exploration and production stocks.
Yes, and I know we did have a poll on which area of the market did you think would outperform next month, large, mid, or small caps. And I know I'm feeling pretty bullish on the dollar now, which would, favor small caps. But I have to say, I think overall we're going to see the large caps do better than the others.
Yeah, I'm going to break it down into first half of October and second half of October. I think the large caps are going to continue to do well, probably heading into earnings. And then I think once some of those earnings come out, because they're going to benefit from a little bit of the weaker dollar recently. And I think once those earnings come out, I think that the attention is going to turn to the small caps because I do think the dollar continues to go higher.
All right.
So there it is. But yeah, 163 responded. 77% are going with the large caps for October. We'll see.
Yes, absolutely. We'll keep track of it.
Absolutely. So here is your upcoming schedule. We do have Charles Kirkpatrick joining us tomorrow. It'll be interesting to have him back. Bruce Frazier joins us. And then, of course, Mary Ellen will be back on Friday. I want to thank everybody for joining us today. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody, and hopefully we will see you back here tomorrow on Wednesday. Happy trading.